Today, folks, we're diving into what are the best stocks for the long term. And I know this is going to be a phrase you hear so much across the internet, especially in the YouTube sphere of finance, but I really want to scale this back into a perspective based video. And this is going to be very perspective based off a generational amount of time. And when I say generational, the average generation time is around 30 years. But I don't think we actually understand the scope of what impacts society over a generational period. And we're going to look through a lot of different generations and see how they've been impacted by certain aspects of the market. Now, I want to take this way back and really just show you how fast things have changed over time by going as far back as 5,000 years ago. And 5,000 years ago sounds like a long time. That was when the Egyptian era really began, which was really only 167 generations ago, which is kind of mind boggling. Now, 167 probably sounds like a lot, but this was kind of during the Bronze Age where the average life expectancy was about 35 or 40 years. You can imagine by cutting these times in half, if the average life expectancy was like 70 years, like it is today. But roughly 2,053 years ago, 68 generations prior, that's when the Egyptians ended kind of becoming the Roman Republic during kind of Julius Caesar's time in Rome, which again, 68 generations ago. If you knew 68 people, and again, even in this day and age where the life expectancy is so long, it was really only 30 life expectancies ago. It's crazy, because I'm always used to hearing like 30 AD or this or that. But realistically, like Jesus's time on earth was about just around 2,000 years prior, or again, 66 generations ago. The religious era of like what we know today was really only 60 generations ago. It's crazy, right? Rome ended 51 generations ago. The Black Plague started 24 generations ago. America was founded 247 years ago, or 8 generations prior. And then, the first plane was invented only 4 generations ago. Or again, if you were talking about life expectancy of today, probably about 2 generations ago. It's crazy how much changes in such a short period of time. I mean, these aren't very long periods of time, and it's crazy how far ago they seem like they actually were. And I'm bringing this into perspective of more my lifetime because I have lived a full generation, and I want to talk about how much the markets have changed kind of within that generational period. And then we're going to talk about potentially what to be looking for in the next generation, or this is really going to bring home probably the idea for most people of index fund investing. But what makes this so interesting is I was born in 1992, and during this era you had ExxonMobil, Walmart, Merck & Company, Coca-Cola, IBM, Bristol Myers Squibb, Johnson & Johnson, some, Raytheon, Procter & Gamble, Pepsi, more household kind of name brands, and oil is kind of the conglomerates. And it would stay like this for quite some time. And I always remember as a kid hearing so much about the Walmart family, and like it was such a big deal as a kid. You'd hear about it on the news, and I didn't really understand how big of a company Walmart was. I mean, it was one of the top one of the top 3 largest companies for quite some time. And you can kind of see the sense of what made, Warren Buffett and Berkshire Hathaway so wealthy with that Coca-Cola purchase such early on, because Coca-Cola was a dominant brand for quite a period of time, like an astounding period of time. I didn't even realize that it was one of the top 10 largest companies basically in the US markets, right? Probably on a global scale at some point. But these companies remain this way for quite a period of time. I mean, we're not talking about close to a generational period, but definitely up till about 1997 to 1998 is when we saw the nuance. This because we were born in the information era, the era of electronics, when this stuff really started to take off. And that's when we started seeing companies like Intel start to emerge here in the later 90s. You'd scroll down, obviously, we'd see Cisco company, Berkshire just started picking up because of some of these bigger cap names. We did see Microsoft a bit earlier on there, but come 1998, this is where Microsoft started to explode, and Exxon was kind of losing the oil steam, and technology like IBM was really kind of making a place in here. And then by 1990, we were heading into the bubble of the dot-com era, right? Because this is when Microsoft market cap was absolutely exploding. We got Intel up here, General Electric, Cisco. We started seeing more like, electronic-based brands. And then by 2000, I mean, you look at the difference in the S&P, and it was kind of just staggering. I mean, Microsoft, Cisco, Walmart surprisingly was still up here over that entire decade. But you got IBM that was really emerging, so much going on here. And then it only really took 1 year later for the crash to happen, when all of a sudden the market caps changed dramatically, right? You're not seeing Microsoft up here anymore, like literally just within a year or two. But it didn't take long for the markets to shift back to the electronic side of things, because during the earlier 2000s, these things were still emerging. But man, what a volatility in the market change just from 2000 to 2001, right? But Not a whole lot would basically, because through the next decade, what I also found most interesting is we were leading up to the 2008 financial crisis, but we can see Microsoft still held dominance as one of the largest companies next to ExxonMobil, and Walmart was still up there in the top 10 for quite a period of time. I mean, probably for the first 15 years of my existence on this planet, Walmart was a dominating company. But if we kind of move over more toward the the 2008 financial crisis, which gets really interesting here, is you can see about 2006 to 2007 here, because of that crash of '08, it's just crazy how energy still remains so dominant. Because you go back to 1992, ExxonMobil was the largest company, and by 2007, ExxonMobil was still the largest company, basically in the U.S., which was quite an astonishing thing realistically, because this was right when the iPhone was just basically came out, and Apple, you notice, has basically been non-existent in these charts up to this point, right? So come 2008, this is when the market was really starting to adjust to the crash, and the things like Procter and Gamble, Berkshire was really making a headway during this period. Come 2009, again, Walmart's we're kind of like back where we were in '92. ExxonMobil, Walmart, Procter and Gamble really kind of dominating the world here. J&J up there. 2010 rolls around, and then all of a sudden we start seeing the emergence of what I think would be the real start of the technological era, in my opinion. Because I mean, the early '90s is when it just started to take wave. But by 2010, coming out of the '08 financial crisis, I think is when people really started to wake up to this reality, because this is when Google really started to become prevalent in market cap size. Microsoft was fully in rebound here. And this is where Apple was, just in the early phase of, soon to be what would be the greatest, shift in markets ever in consumer spending, which would be like the full fledged smartphone, right? Because come 2011, Apple was now the second largest company next to Exxon, and then come 2 years later would be the largest company. And then come 2014, we kind of know what happened past here. This is where the era of these technological based companies and social media really started to dominate. So then come 2015, and it's really incredible that even in 2015, Exxon was still the second largest company, and I didn't really start investing probably until about 2014. I think is when it was about 10 years ago. I don't think it's been full 10 years. I think September of 2014. So I wasn't even fully aware of like the S&P scope of companies, because man, oil really held the dominance for a while, but then hit 2016, 2017. And this is where we start seeing the likes of online shipping and Facebook and, all these digital era-based companies that just completely, took over the entire planet. Then come 2019, and then we hit the pandemic era, and you can just see these companies that kind of exist today as the largest are kind of just playing around in this sphere. But there are some new ones that are really taking off that we're going to discuss here very shortly. But I think it's just really fun kind of skimming through this period of time, because this really represents what happens in an entire generation. And it's almost jaw-dropping, because 2024, you got Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, Berkshire, like a lot of companies like Exxon, still exist up here and just show the dominance of oil, but it really shows you how much the market has changed over a 30-year period. And you could have made great money owning companies like Walmart. Ironically, this is not very accurate. It can't be totally accurate, because it's kind of taking into consideration some of the lower half, because Eli Lilly and Visa, they're huge companies at JP Morgan, but they should be a little bit lower on the list, and there should be some other companies under here. I'll have to take a look and see what the comparables are. I think this is the top 20 list, isn't it? I don't know why it's adding some of these to the bottom, because I know this is a bit different today, but still I think it's fairly accurate and does give some really good resemblance of kind of what's been going on. But I really want to talk about that shift that kind of happened and go back a little bit farther to 2014, because I think 2014 was just such an interesting period for like market trends. And I just remember always listening about Apple stock, and Apple stock was one of the, I think I bought somewhere in 2015 or 2016. And we all kind of know what happened after that. I mean, 2015, from 2014 alone, I mean, Apple, one of these mega cap companies skyrocketed up almost 1,000 percentage points. But during that period, you got to listen to this stuff like this, because it's so fascinating. Listen to analysts and how people thought about the future. And it was only a decade.
The iPhones were a little bit soft and the iPads a little bit higher than expected. Like this is the way that Apple's kind of been trended over the past year. The Motley Fool, we own the stock and we think it's still a buy here and still worth north of $650 a share. So we still like it, even with this, especially with this little pullback tonight. But they do have these challenges ahead of them. They do have slowing growth. They do have competitive challenges, and then they have Carl Icahn knocking on the door and making some fuss about what to do with all the cash, which normally is a good problem, but that is a growing concern for investors. What does Apple do with that capital?
So I really want to talk about Apple a lot and do some comparables because I think Apple is probably one of the best, exemplifiers of like a true market trend shift in consumer sentiment. Because at the end of the day, like you're going to read through so many analyst reports, and in the short term, they're honestly just complete fugazi. They're perception matters more, I think, in a company than the actual value of the company is. I mean, obviously values can get insane, but you go back to 2001, and I bet you've been very happily owning Apple or Microsoft through the dot-com bubble if you kept it for a 20-year period, right? But I mean, it's just funny reading through this and just seeing some of the analyst price targets, and they're downgrading, and they're all coming up with all these different price predictions, and not one of them, not one analyst would have been like, "Oh, give it 10 years, you'll be up 1,000%." You wouldn't have heard one analyst say that, right? Because it's just like a weatherman. Their job is so unimpactful to the reality of what's going on with the consumer on a mass market level, right? And also speaking from the shareholder ownership, I always find is really interesting because I was really doing a lot of digging in some big companies to kind of ask, like, did anybody actually have the fortitude to hold these companies through these peaks and troughs and stay with them for that long? Because ironically, like Tim Cook isn't even the largest shareholder today. This guy named Arthur D. Levinson, who apparently owns 4.53 million shares, who's been a part of Apple for quite some time, apparently. I think he sits on the board, and he also sat on the board at Google and some other companies. I'd love to meet these people because you never hear about them. And I feel like if there ever was an Illuminati that exists today, it's if there's one guy that sits on a multiple group of boards on the top 10 largest companies, I mean, those dudes, I mean, to have that kind of power and say and sit on multiple boards like that is kind of staggering, but not a lot of people. I mean, I'm even shocked that Al Gore is a huge, share ownership too, considerably in Apple. He's been owning it since 2003 and owns like 4,670 shares or 467,000 shares. Sorry, it's late. I got a bit of a headache today. If I'm a little drowned, you'll know why. But it's fascinating kind of just looking at this and kind of getting a perspective of like, how people have been able to hold through these and taking all these history lessons kind of into consideration when you're looking forward. Because I think when you're talking about direct market sentiment, one of my other favorite examples today is a company called Altria Group. Now, I've talked about this in the past, and I just think this is one of those stocks where it's never coming back. It doesn't matter how much people believe in smoking and all these products and the fact that they pay huge dividend yields like 9.75%. This is a stock that is a true definer that for the next generation to come is not going to be where you want your money to be. I mean, you look prior to the history of smoking and how well this company did, only to lead up to as early as a decade ago. I mean, you look at the history of this, up 11,000% from 1984 to 2017 before like something really changed in how the market perceived smoking. And I think education of governments and the cost and the weighing on the healthcare system. But I mean, you take a look at the statistics today in youth. I mean, every year over year, double-digit percentage points, people are quitting. I mean, cigarettes alone has decreased 77% in youth from 2002 to 2019. All the statistics on smoking have been declining quite rapidly, even in the combustible sector. The smokeless tobacco, even from 2002 to 2019, has still seen some pretty rapid declines. So there's no major shift that's going to happen, I think, in the tobacco sector that's going to lead to any kind of like crazy generational growth. It's just not going to happen right over a 30-year period anymore. I think people are well aware of that, and you see it in their balance sheet. And this is why I'm always bothered by people that pump these kind of stocks, because like, again, I don't think fundamentals at the end of the day have a true resemblance on the perception of the value of the stock. It's just a matter of if the company is going to sustain into the long run. Like, they have to have a good balance sheet. It is definitely one of the check marks that is required, but it's not the check mark, because a good perception on a company with no balance sheet can still raise an exceptional amount of cash and move forward and whatever they want to do. But you take a look at cash and cash equivalents. This company in 2019 had 2 billion. Today they have 1.5, and they peaked at about 4 billion during 2021. Like, their cash has dwindled away. You look at their leaf tobacco and inventories. I mean, they have been dropping off because there's no point having inventories when people are smoking less. You just increase the prices. You look at assets here, total current assets have dropped from almost 4.8 billion or just over that to 3.3 billion. We scroll all the way down, take a look at their total assets at 36 billion today, down from 49 billion. And their total liabilities today sit at 39 billion as well. I mean, they have more total liabilities than they do total assets today. So I'm always just perplexed why people find these stocks so interesting. when their legacy is basically behind them at this point. So when we're kind of looking forward at what the next generation is going to bring the next 30 years, like outside of obviously, which is why as of my age, I've been looking at making sure that the S&P 500 remains a 50% stake of my entire investing portfolio, because it ensures these transitions that I'm always having the best weighted stocks passively at the top based off market cap values. It's just one of the best things you can possibly do, I think, at scale. Earlier on, you don't have that much money. It's up to you, especially if you're in your 20s, what you're doing with your portfolio. I'm really only talking from my perspective today, but I'm sitting here and I'm obviously analyzing what I think over the next 10 to 20 to 30 years is going to look like, and especially the next decade, because I don't want to have to wait till I'm 60 to definitely start utilizing some of this cash. But I'm looking at these stocks that are definitely starting off these trajectories that I think are very hard to judge in the short term, but have very long-term, outputs. And NVIDIA definitely comes to mind because it's one of the most talked about stocks today. And it's definitely one hell of a case study to be up 1,500% in the last 5 years. We're now sitting at a $1.5 trillion market cap. And most of that didn't really happen until basically like 1/3 of that entire game happened just within the last year and a bit. So it's just staggering to see a company at this scale, see this kind of growth. And this growth can only be an exemplifier of like a huge shift in what's going on in consumer sentiment. And what's really interesting is this isn't consumer related as much as it is business to business related, right? Because the end consumer, I think as much as the end consumer utilizes AI tools, it's really not the end consumer that's seeing like the reality of what's happening to NVIDIA as much as it is Amazon and Meta that are purchasing just ungodly amounts of these H100s and these GPUs that are, driving a lot of the value that's going to persist in the future. But I don't think NVIDIA will actualize that value. That's why NVIDIA is so interesting to me, because it's like, they're definitely part of this trend-setting generational shift. But the problem is once they've got the tools, which NVIDIA is selling, in place, the only ones that are truly going to benefit in the long term are those companies like Meta, like Google, like Microsoft, that are actually innovating the tools that the end consumers are using. But when I do think of one generational shift that's happening right now that is also insanely fascinating and is so damn controversial, it is Tesla. I love this company a lot since I bought it in 2019. I did think it got a little crazy back here, which is only why now I'm just starting to buy back into it. But I think it's one of those companies where you kind of got to sit down and ask yourself, like, it's one of the easiest things I think for people to understand, and it's yet one of the most controversial. And it reminds me so much of the early days of the iPhone is, do you believe that electric cars are going to be the future? It's either yes or no. If the question is yes, and electric is the most efficient of all the vehicles that exist, then Tesla's definitely going to be a massive player in this game, right? And everybody's arguing this when you see Toyota and all these companies coming out with hybrids and all these different cars. And hybrids are interesting because you get the best of both problems. You get the problems of gas and electric under one hood. I mean, it's just, I don't want to get into the debate of Tesla. I just think it's one of the most fascinating case studies that we are going to experience in the next probably 5 to 15 years is going to be the real generational set. And then the next, 15 years after that, over that 30-year period, I think is going to be absolutely exhilarating to see, because the auto industry has been undisrupted since the basic early 1900s, right? So it's going to be really, really neat to see how this generational shift unfolds with the branding power of something like Tesla, the balance sheet that the company has, which is why it's one of the most talked about companies right now, right? Forget all the other stuff. We could talk about robotics and self-driving, which I think are going to be, again, these AI massive proponents to the company. But I think the auto industry in and of itself, especially like with what we know today and what's coming tomorrow, you can argue it any way you want. It's just that Tesla really has a super small ownership of the entire auto market today. So imagine, when iPhone just released, or the Apple just released the iPhone, right? Is that where we're sitting with Tesla today? Because if we are, it's a fascinating conversation to be had, right? But you're going to see analysts, and I love watching Everything Money, because honestly, I like putting price targets on thing as a joke, as a prelude to something that's probably never going to happen or be accurate at all. So when I see like these guys come out, and I always just think it's funny because, oh God, like this dude was shorting NVIDIA, and it's just crazy how much NVIDIA's up since she decided to short it, which just shows you like this guy has no idea what he's talking about. And when you look at his price prediction on Tesla 11 months ago, you see a high price of 77 and a low price of 15. You move just a few months later, he gives the same price prediction on the same company, says that it could be worth $278 to $56 on the low end. And then just 2 days ago, he's saying that it could be worth $203 to $30. It's like, this is the job of an analyst right here. I can just say whatever numbers I want. I can take the balance sheet and revenue and project out any crazy thing I believe in the future. But the raw reality is is you can't look at this as the future of a company. You can really only understand the branding power and what this is going to do for society, because if it truly is more efficient than what exists, and if it truly has a standout brand that is selling, and you're seeing some of the market connection go on in the way like it impacts society's conversations, like the iPhone did, like Apple did on that groundbreaking day of 2007. I mean, you can't really wrap your head around like the value of, let's say, you know, the iPhone currently owns 61% market share of US phones, right? Now, could you imagine if a company like Tesla goes from 4% to overtaking the top 3 companies in the next 10 to 20 years in US auto sales, just like Apple taking up maybe even like 40 or 50% of total US auto sales? I mean, what does that mean, right? It's hard to tell. Now, that's not saying that's what's going to unfold. I mean, General Motors and Toyota could still remain dominant brands, and they could all equal weight share of the auto industry. But I don't think that's the way any industry is headed. I really think industries are monopolistically driving down to certain brands. And again, the efficiency of those brands and what it means, because again, you get full self-driving at play, and some of the stuff that Tesla's working on, which right now is insane at how far ahead it was compared to where it was even like a couple years ago when they were transitioning. I mean, it's crazy what that will mean for branding power. It's like, oh, well, Tesla's the only company with like legitimate self-driving cars that I can just buy and own, right? What does that mean for branding power? And what does that mean for the future of General Motors and Toyota and Ford, these companies that have basically sidelined all this future technology, when we know tech has to be part of the inevitable, right? So these are very interesting conversations to be had, and I think they're largely just, you know, fun to think about, you know, the top 10 stocks, you know, looking past the S&P 500 and where things sat a decade before to where they are today, and what's been driving a lot of that. And you can kind of see from consumer sentiment to like, you know, the use of computers and phones, and to like, you know, all these different industries with AI today. And honestly, I think the revolution of AI and not having that in your portfolio is going to be insanely detrimental. So I'm always tired of people just chasing the same old, you know, dried out dividend stocks and all this stuff. And I'm still a prudent dividend investor. I mean, my parents, helping them get into retirement, really focusing on the dividend side of things for them is a lot different than the way my portfolio looks. But I really think people are missing this, you know, you can say tech stocks are expensive today, but it's going to look laughable if AI turns out to be the way we know it's going to be, and those companies that dominate that, it's going to be unfathomable the amount of value that is worth, that you could price. I mean, you could see like Apple's another really fun example of this, right? Like, what's the future of iPhone? Like, you look at Apple today trading at a 30 times multiple with no growth, no earnings per share growth, everything is flat. So why can Apple command a 30 times multiple? Well, I mean, people are presuming there's going to be a future where phones are going to get much more advanced, AI, the margin expansions, and it's just one of these slump years, you know, where the market conditions just aren't driving consumer spending like it was. But it's not going to be like that forever, right? So I think that's the same thing with Tesla today, and the argument that, oh, you know, they're slowing down, it's the end of the EV revolution and blah, 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 blah. It's like, okay, sure. You know, whatever you tell yourself. So that's just kind of what the perspective is on these mega giants. So this is why I think it's so prudent. Like, if you look at the last decade and saw how like these top 10 tech companies, you know, even though NVIDIA wasn't a top 10 for the longest time, but even if you just pick the top 5 tech companies, and they were so overvalued 5 years ago, and just look at what they've done in 5 years, was the best thing you could have ever done with your portfolio, was just probably put half your money in the S&P and then top weight 5 of the best tech companies. And I'm pretty confident the next 5 or 10 years is going to look very similar. And I think that's what's going to end up happening, because the balance sheets are unlike anything before. I mean, if we went back far enough, and it'd be neat to see what the balance sheet of, say, like ExxonMobil looked like in, say, 2000, 2010, and then in 2020, and then do the same comparisons to like the tech companies from like 210 to 220, because I guess a lot of them, well, even Microsoft, you could probably go back as early as 2000 and just see what the balance sheet difference look like. Because I mean, the balance sheets of these tech companies today are so unfathomable that like the bottom half of the S&P stocks don't even meet the cash equivalent of like a lot of these big tech companies. I mean, like even the total assets of like Google today are like the vast majority of the bottom half of the S&P entirety of their market caps. Like, it's kind of nuts to consider. But yeah, anyways, Tesla's a solid near 100. Potentially, but again, you could have said that about look at Apple in 2015, right? Everyone's like, it would be a solid buy if it dropped an extra 10, 20% or 50%, but then it ran 1,000%. So in the perspective of the long run, it's like saying the S&P is a great buy when it dropped in October, and we made some incremental returns, but come 20 years later, you won't even remember you did it. So I always it's fun playing these games. I always just feel like when I'm on YouTube and I'm playing around with finance and listening to all these people get excited about stocks, I love getting excited and just seeing all this stuff, but it's such child's play in the perspective of a generation. Like, it really is just complete meaningless garbage most of the time. But hey, I'm there. I'm a clown. I admit it. We're all clowns here just trying to make money off you guys watching these videos. And it's a sad reality of the self-interested environment that exists on social media today. I mean, you look at Mr. Beast, the Mr. Beastification of the internet. It's all about metrics and returns and like short-term gains. No one gives a crap about the next 10 or 20 years, right? Kyle, I recently learned that the top 10 hedge funds in the US hold about 70 positions in the top 7 of the S&P 500. Yeah, more than likely. I mean, it's not me or you that are making up, Apple's $2-3 trillion market cap by any metric. I mean, how much money does Vanguard hold, right? Like, let's just take a quick look. Vanguard total funds value. Let's take a look here. Yeah, I mean, Vanguard's total net assets are like $1.46 trillion. I mean, BlackRock, Vanguard, but again, I mean, they're just, I think it's like not a good perspective to think that they're like controlling everything, because the fact is most people's money, like, I mean, how much is VOO worth alone? Like, VOO is probably worth, hundreds of billion. What's the total asset value of VOO? I think I could just pull it up because they tell you on the actual, the investment thing, but I think it's like over 100 billion or something like that. I think what's the value? What is it? Total. Let me just pull up VOO and see, because I think it shows you the fund and how much money's sitting in it, doesn't it? Because I mean, again, it's a passively weighted fund. So even though like these big assets that basically are just being managed for retail mostly, they're not like someone's managing it. It's like a lot of those funds are just put in passively weighted ETFs that are mechanisms. So it's not like they're actually controlling a lot of it, because let's be real, if they changed the whole metric of how at the S&P 500's VOO operated, or SPY, everyone would sell out of it, right? They liquidate it. I'm trying to find the value here, because usually it tells you how much asset value is being managed under these portfolios, because that's how you get the liquidity, right? To understand like what the trading volume is, because sometimes great ETFs have no trading volume. You can't even buy them. Man, how much is it? I'm so curious. Somebody look it up for me. I can't find it here. I know it's in the hundreds of billions, right? It's a lot for sure. But either way, you get the point. Let's just take a look. I'd love to start gobbling up Tesla, but a short time frame for holding is 5 years max. So that precludes putting it in my RSP. Does that only leave my margin account for holding it? I'm confused by what you mean to putting it in your RSP. And you're holding it for 5 years max. Is that kind of getting close to retirement for you, or what? Like I said, I it's so weird to say that like I want to retire in like the next 10 years, because God knows that's not the case. I can see the path there. And I was arguing with somebody, not arguing, we were having a good conversation in the comment section of one of my videos where we're talking about like, the biggest problem with most people is they don't have a plan. So when you tell somebody that, hey, like I plan on being here by the age of 40, they're like, good luck, whatever. Like, it's like, yeah, but I have the numbers. Like I can see what I can make. I understand like rates of return, and there's a lot of speculation in the rate of return, because sometimes if it might be lower, who knows? Maybe the S&P does flatline for the next 10 years. That could directly change how this is going to happen. But luckily we have good incomes. We have, combined incomes, but you can trajectory it out pretty confidently within probably a 30% margin, give or take. And you can say, hey, like, most of my basic bills should be able to be covered by buying, 4 or 5% yield off the market with 500,000 or 600,000 in a paid for mortgage, right? Which in the perspective of like 10 years from me or before 40 is highly, highly likely for where I sit today. But again, is that really where I want to be though? Am I going to sell Tesla and like these stocks in the S&P to do that? I doubt it. I feel like it's fun to fixate on that income like most people do today, but it's just probably not the reality. The comment section is never good for conversations. I beg to differ, actually. Lately, YouTube's done a good job at getting rid of a lot of the spam. I think the spam's evolved a little bit. You see these people that are like, oh, your videos are so great and enlightening, and I've been trading with this, and I've learned so much about Tesla, and I made this much money thanks to this person. And then there's like 20 comments underneath just talking about some like fund manager or something. I mean, people are doing a good job at working around the algorithm, but I'm honestly impressed. I think YouTube's comment section has cleaned up a lot. I think TikTok is very toxic still, and TikTok's comment section has a lot of spam and stuff, but I think YouTube's done a good job at cleaning it up. I gotta say. Dividends are great in TFSA. Yeah, no, I prefer growth. Obviously, you're only taxed on 50%. Dividends are the most taxed, so they're probably better in a TFSA, but I don't care. Like I'm focused on total return more than I am, more or less dividends these days. In the old days, it was cool to smoke. Now people rather eat unhealthy, expensive junk food rather than smoke. Yeah, that's true. I mean, to some extent. Everything's junk food, though. I mean, you go to Brazil and you listen to how people in Brazil talk about Western food. Everything in Brazil is like made that day. Everything we eat here is junk. I report spam when I see it. I did that for a while and then I gave up. And now I try not to talk about. Actually, the crypto scammers are kind of gone. I think I don't see the same. Actually, that's not true. I'm going to show you one of the funniest crypto scams real quick, and then I want to reround the conversation here. But usually on Jeremy's videos. Financial education. Let me just pull one of these up, and I'm going to show you guys one of the funniest things I've seen. And this must work because I see it all the time. And this is why I try not to talk about crypto too much. And Jeremy's not even a crypto guy, so I don't know why it's on his channel specifically. But let me go back to one of his older videos. Let's just pick one here. Let's see if they've been targeting him. Let me see if I can share this tab. I don't know if this is going to be a good example if it's even true right now, but let me share this and show you guys this real quick. You go under Jeremy's comment section. Usually what I'm seeing, and maybe I'm wrong, it doesn't look like it's on this video. I swear, maybe it's just when he posts videos, I see a lot of those comments where it's like, oh, this new cryptocurrency, it's like Amazon crypto thing. And it takes you to a website that I looked at where it's like, I can't even explain it. Oh God, I used to see them all the time on these videos and now I'm not seeing them at all. Actually, wow, I'm surprised at how clean Jeremy's comment section is. I swear for the longest time, it was just spam.
Well, how did
it clean up? Might have cleaned up. So like there's, I don't even know. I think these ones might be spam. Look at 771 likes. Yeah, a lot of these are probably scams. Yeah, like Margaret Johnson, Arnett. Yeah, these are the ones that I'm talking about, but there was some crypto ones I saw. These are the clever guys where they they make these little things that dominate the top of the chat. But still, I want YouTube IPO profits. Laugh my ass off. But yeah, folks, I don't know. It's going to be very interesting. And some of you asked on my last video out of curiosity, and I haven't done this yet, and I'll do it to some extent, show you the combination of like my fiance's and my portfolio. Because I kept telling you guys, like we're basically like, we're taking on that original concept of, I believe, just picking the top tech companies and just pairing it with most of these ETFs, like the S&P 500. Because I always said, like, the best thing you can probably do is pick 3 or 4 ETFs and just cost average into them, like, QQQ, VOO, SCHD, and whatever one's underperforming, just start upper weighting it a bit in your monthly contributions, but keep distributing between all of them. So like right now, the Qs are flying, right? So maybe not put as much in the Qs. SCHD is still down a bit, so maybe upper weight some of the dividend stuff. I don't know. You can really kind of play whatever you want to do that's comfortable, even with the small caps or the Russell 2000. But ideally, what we're trying to do here to keep the outperformance is basically just implement that same idea that worked for me so well in the past, because I made so much money off Apple and Microsoft. And, I did exceptionally well with some smaller caps, but I really like the idea of just picking 4 or 5 really big tech companies. So for right now, like, I'm just focused on Google and Tesla because my fiance does not own a lot of those kind of companies. But she owns quite a bit of Meta, and I don't want to share it with you yet. I will in a bit, but I'll tell you the shares she holds and what she bought them for. So just make sure I'm not showing too much here, because there is a comfortability level of just pure transparency on both sides. But I will. I promise you I'll do an update between our portfolios and give you guys some further insight. But my wife for Meta, she owns right now, I think she's got 25 shares at an average cost of $218 a share at a current market value of about 13,000 CAD. It's nothing too crazy, right? Like, these aren't like these crazy huge positions. We're not like overweight these by any metric for the scope of our entire portfolios. But she bought these companies at great prices. I mean, she bought Apple at an average price of $96. She's got about, it's not a huge position. It's only 27 shares or so. But Meta is definitely her biggest position overall. She's got a little bit of Google, a little bit of Amazon. She's got a nice chunk of Microsoft too at a really good price. I mean, she bought these at basically the pandemic levels, so she's crushing it to most extent. Even her bank, she owns a few bank stocks. And I mean, I think her price on, look at how much Bank of Nova Scotia is down, and she bought Bank of Nova Scotia for $59.66. And right now, I think Bank of Nova Scotia is around $62 or something. She got TD I mean, most of her prices are pretty on point here, which is nice to see. Yeah, even her TD, she's pretty much green on all the banks, even though they're down because she bought them at such a good price point. But yeah, it'll be really neat to see, 20 years later, yes, sir, 1999 tech bubble. I don't think we're in the tech bubble. I think when people say the market's overvalued, they're so misconstrued because of like the dominance of these tech companies. I think you watch. I mean, I really think, I think Apple's expensive for today, but that does not mean that they can't be expensive 5 or 10 years from now, depending on what they do. I think it's going to be mind-boggling. Let me just put this in perspective. I mean, I showed you that AI video with that comedian like what, a week or two ago. I mean, it's just, I can't imagine the value. So like I have editors every single week emailing me saying, let me edit your videos, let me do your short form videos. There is like what's it called? Sorry, my brain's a little bit out of it, but there's an editing software, Opus, I think. Is it called Opus? Let me just look it up. Opus editing. Let me just give you an idea. Yeah, look at this. This is a prime example of an entire generational amount of wealth that's just been wiped out from a job. So in my job, I'm getting offered so many times for people to edit my clips. Let me take your long form videos and make them short form. Let me edit your long form videos. Let me edit your podcast, or let me do this. Let me do that. This one program is like $10 a month, and they have a free version, and it's mind-boggling. They will break down a long-form video into 10 short-form clips, and they will rank them by what ones are most likely to go viral. It is honestly, I've been using this. I have used this a few times now, and my jaw hits the floor. I'm like, why am I going to pay someone $500 a month to edit my videos into short form when I can pay this guy $10 a month, and it's all software-based? I don't even know what the value of this company is, but I guarantee you it's in the tens of millions already. Easily tens of millions of dollars. Whoever made this AI software that edits these videos, congrats. You just made a multi-bagger of a lifetime of a business. You just wiped out an entire field of editors, literally like that. And this company has only like been, I don't even know how long. When did Opus be created? Opus Clips was founded when? Actually, let's just take a look when the website was founded. This website that they have, let me get rid of later, 2023. This website didn't even exist until 2023. When did Opus Clips founded? Let's just take a look here. 2022. Opus founded, this company was founded in 2022, damn it. And it just wiped out an entire generation of people. Now, you don't think Google, you don't think Microsoft are really looking at this and trying to gobble these industries up right now? I mean, come on. I mean, like I can't even express how much a company like this should be worth in 5 or 10 years from now. I mean, let's be real. It's going to be unfathomable. So, I mean, you could say Apple and Google and the S&P is so damn expensive, but is it? Is it really? It's going to wipe out an entire industry and cost a 20th of the price, or a 30th or a 50th of what it's going to cost to actually hire an employee to do it. And what does that add to their bottom line? Because it's all margin. You're not paying an employee. It's 100% margin. There's no employees to do it. You need one software engineer to maintain the product. I mean, God damn, it's hard to imagine. It's hard to imagine what's going to happen in the next 5 years. But I'm promising you, it's going to be an intense amount of return. And if you're not invested in it and you think putting your money in money market funds is the most intelligent thing to do, and I hate being rude because I know a lot of people, even in my personal friend group, that have all their money or most of it in money market funds. I'm sorry, but you're a moron. I'm like, if you're going to sit here and tell me things are overvalued and you just don't see what's coming, and you're going to miss out on a rate of return that, like I said, you can just tell me Tesla's expensive. Tell me Apple's expensive. Tell me you have no idea what's coming. That's what these analysts are doing when they put short-term price targets saying Tesla should be worth $100 today. It's like, okay, well then let's wake up 5 years later and see if they end up, when GM is struggling to make sales because they focused on hybrids and Toyota's focusing on hybrids, when meanwhile electrics are the only efficient auto thing to buy. Like, I mean, 5 or 10 years from now, things are going to look wildly different, my friends. And AI is going to be a leader. So pick up these trends now and, weight your portfolios accordingly. I'm not a financial advisor. I'm just a clown on the internet. So opinion on SCU as a spinoff. Yeah, this is another interesting one for software because I think it's overvalued as hell. I do not like the Canadian markets at all. I know they've been doing fine and whatever, but I mean, Constellation Software, to put it in perspective, if Tesla's trading at a 50 times multiple right now, how can Constellation Software trade at 110 times multiple? This company, like, it's like Shopify. I mean, the problem is in Canada, we have so few tech companies, too much money floods into them, and it destroys them from a technical standpoint, because it is not worth paying 100 times multiple for a company that's, net profit was only up 5% and their revenues were up 23%. I am sorry. They're not, like, look at Nvidia. Nvidia's trading at like an 80 times multiple, and it makes sense. The way Nvidia is growing, I can justify a 60 to 80 times multiple, but I cannot justify 110 times multiple on a company like this, because it's like Shopify. They're just not growing. I think Shopify is a bit cheaper than this company, but I mean, the revenues are great. They've doubled them just within a few years, which is super awesome, right? But they just don't. The more I look into it, the more I just don't understand, like, their assets. Like, I mean, the company's trading for what? I mean, what's the market cap? Like 100 billion or something insane? And it's just ridiculous. They have what, like, total equity? I mean, they have what, 2.8 billion, give or take, in underlying asset values. 2.8 billion in underlying assets against a $78 billion market cap. Tesla's got what? Like, I mean, Tesla's trading for like what, $500 billion, and their total assets sit at something like, I hate to do the top of my head. I'd have to look, but I think it's like 70 or 80 billion or something insane. I mean, even Tesla, from an asset standpoint, trades at a way better value than this company does. So I just have a hard time understanding, like, how these companies have gotten so expensive. So I mean, yeah, I don't trust it personally, but I avoid most of these Canadian tech companies for that reason. Too much risk. Again, these companies are just out of the stratosphere expensive. If you're just talking about values, even compared to the US markets. So just be careful with the Canadian growth stocks, man. They're I don't know how they've gotten to this value. I started looking into them, and I'm interested. What are we talking about here? I've been taking profits this month and embracing having 50% money markets now, cost averaging into new positions. Honestly, man, depending on how old you are, like I said, for my parents, for example, like my parents, I have like a good chunk of their money, like I think 20% of their portfolio money market funds. So depends on what age you're at, right? Like, I'm only talking from my perspective. I think if you're 20 or 30, buying money market funds is a joke. I honestly think it's the stupidest thing you'll do. Like, why are you focused on a 5% return when there's going to be hundreds, if not thousands of percent returns coming in the next decade for certain companies that are probably sitting in the S&P top 10 today? I mean, look at Nvidia, for example, right? Like, Nvidia just kind of, I mean, if you were younger and diligent, I'd be just really focusing on those companies like a hawk. But yeah, I don't know. It depends on how old you are, man. But I'd be very uncomfortable today having 50% of my money in money market funds. Even if the S&P flatlines for 10 years, I've got some dividend income. That's why I always have some dividend stocks like SCHD. But realistically, I think the markets are going to astound people in the next decade. So Tesla's not overvalued. But no, Tesla is very expensive today, but it depends on how you value growth. I mean, Constellation Software, they just acquire software companies, and I don't know what software they own. Are they buying things like Opus? Because they don't show the growth rates. Like, again, for the last few years, the growth rates have been great, but for the last, let me just pull it up. Like, I mean, if we're going to talk about growth, this is so perspective based, because Tesla's not really growing either. I mean, the reality is Tesla's business is growing, but their fundamentals aren't. But I just don't understand Constellation, because they just acquire a basket of software, right? And I don't know what the value of that software is, but I don't think it's worth 100 times multiple. I just have a hard time believing it. But I can honestly say that I wouldn't be surprised if Tesla ends up taking 30 to 50% plus of the auto market in the next 10 to 20 years. And the value of that is going to definitely probably outweigh the value of the current market cap just in the auto industry, because it hasn't happened since GM dominated the auto industry back in the 70s and 80s during their glory days. I mean, the auto industry has been very spread out, but now I think it's starting to become monopolistic, just like the iPhone did in 2007. I think that's what Tesla is. And that's just my perspective, and I could be wrong, but that means that, in my opinion, it's probably undervalued today. I think it's expensive based on metrics, but again, those metrics mean nothing. I mean, everybody could decide tomorrow they don't want a Tesla, and Tesla could be worthless. Tomorrow, everyone could decide they don't like iPhone or Apple, and Apple could go under. Like, I mean, it's all perspective based. My perspective on Constellation Software is I don't understand the software. I don't know what they're buying. I know nothing about the company, and it's trading at 100 times multiple. I would rather buy Tesla for 50 times than Constellation Software for 100 times, or even Microsoft for 30 or 40 times a multiple than that of, the insanity of that. I mean, you just got to understand the insanity of it. Like, I just don't know enough about it. I'll just leave it at that. Everything is cyclical. Hail Rome. Yes, depending on what generation what the generation's going to bring. Anyways, folks, we're starting to twist here, but again, it's very perspective based. That's all investing is. It's your perspective, right? I mean, yeah. If you guys go watch Dumb Money, I love listening. I've been making so much fun of Chris lately. I saw this funny TikTok. I don't know if I can share it. I don't even know if I can. Let me see if I can find it in my feed. It's worth watching. I thought this was so laughable. I made fun of him for it. Let's see if I can find it here. Is it in my feed? Oh, oh, come on. Right here. I got to share this with you guys. I love this. One sec. This is hilarious. I love this. This made me laugh so hard. Take a listen.
It literally almost doesn't matter over the long term if you have it bucketed correctly, right? That's what's so fascinating. Like, everyone's like, I don't want to take a 90% drawdown on my money. I don't want to lose 90% or 95% of my money. Like, that's crazy.
Oh, I'm not even sure.
Is it? If you're investing for a few decades, like, is it the end of the world if you have one or two times when you have a 90% drawdown? If the rest of the time your money's compounding at like 25%.
So I did the math on that, and Chris is a guy that takes on like the utmost amount of risk. And why is it not sharing this? I'm sorry, I kept trying to share it. You guys want to just
30%, right? Like, it's a mindset, but risk doesn't matter.
So it's just funny because he's just saying like to take a 90% drawdown means nothing. But this is a guy that's used to making like 1,000x returns. This is a dude that like turned 20 grand into like 2 million in like a single trade. Like, this dude takes risk to a whole nother factor, which really changes his perspective on things to be saying something like this, which is so unrelatable, by the way, because if you took a 95, so say you had $1 million and you lost 95% of that, you are now down to 50 grand. It would take you 15 damn years at over a 20% return to make back that $1 million and break even. And that is a very daunting task. It is damn near 99% of people will never come close to achieving such results. So I think it's laughable, right? But this is a guy that has achieved absolutely absurd results. So you can see his perspective on things is wildly outlandish, right? So, I mean, if you have a wildly outlandish outlook, you're going to probably get wildly outlandish returns, and you're going to look at buying things that are just wildly outside of people's understandings of current market value. So, I mean, this guy right now is loading up on Tesla because he thinks, just like I think, that robotics could be the next big trend for that company in the next 3 years. And when people actually start recognizing the value of robotics, you think Tesla's, I'm only talking about Tesla's auto company. These guys are looking at robotics. And I think, we've talked about robotics. I think, again, that's, if you think about that future and what that perspective means on a company like Tesla or some other robotics company, it's probably going to be tenfold what it is today. So, I mean, perspective matters more than value. Perception of these companies, right? Perspective and perception. When you're looking at stocks, if I can leave you with one thing that has led me like the most returns in my life, perception over value. I made most of my money off companies like the Canopy Growth Corps of the day, the marijuana boom, the 2021 hype, buying really speculative things, but the perception of those things was so wildly outlandish. These companies ballooned to astronomical values, and I bought them as overvalued companies. I bought Apple when it was overvalued. I bought Canopy as a junk dollar, basically penny stock. And everyone's like, well, why would you buy such garbage? Well, because I believe the perception of the future is going to be, this is the largest MJ company today by 2018 when they legalize this stuff. Everyone's perception is going to be, holy crap, this is a whole new market industry. And, that's all it takes. It just takes one of those understandings of something that you think you know better than anybody else. And there's 3 things I know better than anybody else. It's robotics, AI, and software today. So look at it. Just pay attention to those industries and just say, hey, in 3 to 5 years, what do you think people are going to be talking about on a level that they're just not understanding today? Clearly, it's going to be some kind of AI software related to all these different industries that are going to be widely disrupted, or it's going to be robotics. And how many robotics companies actually exist today? None. There are very, very few robotics companies. Most of them are not publicly traded. The largest one is going to be Tesla. And that's just the reality of it. Tesla's likely going to be the largest robotics manufacturing company because they have the capital to grow, they have the manufacturing to scale. And when people recognize that value at some point, when they start demonstrating these robots doing really normal tasks and they start implementing them into reality in the next 3 to 5 years, I just picture what Tesla did in 2019 and imagine now we have a whole nother sector of the market that hasn't existed before. That's kind of the idea, right? So that's my perspective on Tesla. So if Tesla comes down and gets between 200 to $100, I'm buying it all the way in between here, and we'll see what happens. The fact Kyle is so cocky is bearish to me. Yeah, but I mean, again, tell me I'm wrong, right? Like, if you're good at something, I know I come off as cocky a lot of the time, and it's probably a turnoff to a lot of people. But again, when you've seen the kind of returns that I've seen in the past, and I want to get some returns like that into the future, I'm going to do the same thing I did in the past. I mean, you go listen to people like Chris from Dumb Money, and I mean, the guy's talking so outlandishly about stuff. Even to me, it's ridiculous. But again, cocky, I think, is just again, I should probably just scale back on that a bit. I don't need to get people going too bad here. You haven't been good for long enough. Yeah, I know. But again, you look at my rate of return over not only one of the worst bear markets that, we've experienced. I bought stocks when they were super suppressed through multiple market cycles. And, I've outsized returns beyond, I think, like I said, if you want to play the game of like, I've been in the market for going on 9 years. I know it hasn't been long enough, but considering I owned a lot of individual stocks coming into one of the worst market corrections, I didn't see any of the drawdown. And, I'm still sitting at just absolutely absurd returns where most people got wiped out. And I recognized some stuff, and it didn't affect me the same way. And I mean, I'm not trying to be cocky. It's just, this is what I do for a living. So like, when I'm stating these clownish predictions, like, and I'm making bets with my money and I'm showing them to you guys, I could be just outlandishly wrong, and my cockiness might bite me in the ass. But the fact is I have 8 years of outsized returns doing this. And I've done it through bear markets. I've done it through, all this controversy and all this crap. And I've been hearing so much negativity. Again, I bought Apple and I got like an 800 or 900% return on it because I bought it in like 2015 or 2016. I think I ended up with an 800% return before I sold it. And, everyone told me when I bought it, it was overvalued and the iPhones had peaked. Their iPhone market was saturated. And it's the same thing people are saying about these stocks today. And it's almost laughable, right? Now, again, I could be completely wrong, which could bite me in the ass, but we'll see. Who the hell knows? Who knows what the future brings? But again, if it bites me in the ass, you'll be here to see it, because unlike most people in these comment sections, they're not sharing a lot of this stuff. Do you ever hold back on buying U.S. stocks due to the conversion rate? Never, ever, ever have I ever held back. Every time I get Canadian dollars, I'm converting them to U.S. dollars almost immediately. And like, I would rather operate in U.S. dollars any day over the week. What's funny as well is like, people always shit on the US dollar and the printing of dollars. And it's just like, the US dollar has gained more value. And this is the most controversial thing that I think is so misunderstood, is the dollar has gained more value in the last decade than like, I think people truly understand on a global scale. But everyone's like, oh, inflation, the dollar, the purchasing power, shit. It's like, I guarantee you, if you gave up your bank account today to somebody in North Korea, parts of like, go to any country, China and Brazil, give me your entire account, and I guarantee you somebody could well retire on it beyond where they could have 5 years ago. Like, I bet you just having US dollars would have 10x their retirement plan if they could have just had like 50 grand. I think most people in Brazil at this point, if they had 50,000 US dollars 5 or 10 years ago, like, it'd be worth so much more to them today. Like, because it's all comparable, like, because dollars can only be valued against other dollars. So, I mean, let's just take a look. This is what I think is most interesting about like currencies, right? Like, it's one of the most fascinating conversations, even to the Canadian dollar, right? Like, if I just held US dollars, my rate of return has been exponentially higher. Just like if I would have just held all my money, I wouldn't have even had to invest money. You know that? Like, if I didn't even invest money, I would have had a great rate of return just holding US dollars. And I just don't think people grasp that concept too well. Because, I mean, you look at the last, you go back, let's see here. I mean, look at US dollars in 2010 versus where they are today. I mean, they're up at the bottom of the market in 2008, they were worth 72 points. And today it's worth like 103 points. So the US dollar has gained like 30 or 40% value just in the last decade alone. And I mean, if you compare it to like the CAD dollar chart, right? I mean, let's just see what you would have like lost out on here. So the Canadian dollar since even 2021 is down 10% against the US dollar. I mean, look at the Canadian dollar. It's just trash. I mean, it peaked in 2011 and it is down 27%. I would have made an extra 27% return just putting my money in US dollars back then. Like, it's nutty. I mean, it just puts things into perspective of how weak. I mean, let's just take a look at Brazilian dollars. I mean, let's just take a look here real quick. Yeah, the Brazilian dollar, since, oh my God, it is down like 68%. You could have made an extra 68% return just in the last 10 years if you lived in Brazil, putting your money in USD. This is why I never hesitate. I'll never hesitate to buy US dollars. Again, you know, we could go back to the day. I mean, it's just the generational thing again, too, right? I mean, the US dollar is dominated for what? How many years now? I think the European dollar was much more dominant leading up to what? The 60s, I want to say, 70s. I mean, once upon a time, you were better off owning, you know, the British euro or the pound or whatever. Now it's US dollars, baby, all the way. So I'm not a current. I don't do Forex anyways. I just see that US has the dominated companies. They have the dominated tech. Nobody's beating that. And for as long as that's the case, people are going to flood their money into US dollars. Yeah, and I think US dollars will be they will dominate for as long as US companies dominate, right? And you see it in Canada too, right? Like the US is so much more capitalistic, forward looking, because they're basically monopolistic kind of companies, and the government doesn't do anything about it to any major extent. Whereas in Canada, like the government comes down on our big companies with so much tax regulation and bullshit that it just hinders the growth of, like, I mean, think of it this way, right? Like I get that it's helping the system out a little bit. You know, the Canadian government's like, ooh, we're going to take some more tax money out of your big banks, the biggest companies in Canada. We're going to lower their growth rate, which is going to kind of slow down your retirement, because if you own the big banks, they're not going to make as much money as they used to. But hey, we're going to put that toward carbon emissions, and we're going to put that toward healthcare. And okay, so you're kind of implementing that on your own, but most of that's caused by a deficit that you guys caused it anyways. You know what the dumbest thing too, and I'm rambling a lot here, but this is the funniest thing about the Canadian markets over the US markets. We have a housing problem here in Ontario, right? So you know what they do to me? Like, just somebody that's recently new to home ownership. Let me grab this real quick. I got this wonderful little slip today, or the other day, talking about basically it's called Submit Your Vacant, vacant, if I'm saying that right, your vacant home tax declaration of occupancy status for 2023. The government, if you can see this, if you do not live in the place you own for 6 months, they're going to charge you an extra tax for that. That's what I have to say about the government. That's literally the most BS. And don't get me wrong, it's not like I'm leaving my property vacant. So what? So if I don't rent it out to somebody, you're going to charge me extra tax for not living in it for 6 months? That's how bad the housing problem is here in Ontario. And that was only caused by the government. It was a self-inflicted wound by over-immigration and not enough, regulation on housing being built because of greenbelt regulations and bullshit, and just coding and making it impossible for people to build affordably. I mean, I literally, in my little town growing up, my buddy's like, my house is junk. I want to tear it down and rebuild it. And the guy at the municipality said it would cost you more to tear it down and build new than it would be to just sell it and go buy another property. There's so much bullshit bureaucracy in this province that it just bothers me immensely. It really shows you the lack of growth and just insanity behind taxation. Because we have a housing problem, I own my property, but you're still going to tax me for it if I don't live in it. You're going to put extra tax on that. How does that make any sense? It's a privilege for me to own a place that I'm not living in. And that again, just shows you what the government's done. A lot of foreign buyers and a lot of, it's all self-inflicted. I can think of like 3 things we could change tomorrow that would resolve so many issues, but it'll never happen because of all the insanity. He's a magician. He pulled it out of nowhere. Did you guys get that? I mean, am I the only one dealing with this insanity? I was like, really? Again, not that I'm moving, not that I'm doing anything, but oh God. Do you have any, I got to get off this stream. Do you have any USD investments in taxable accounts? I think that's a nightmare for the CRA. And that's really not at all, actually. I mean, my corporation it's fully taxable in the corporate account, and I hold all US. It's really not that big of a deal. Even if you, like I said, there's no tax bull crap. Again, if even your bank, it gives you all the tax forms anyways. You're not paying any extra tax. In Canada, the best thing about it is you get the same tax rate. So if you own a US stock and you make 100% gain, you're only going to pay tax on 50% of it. So you get 50%, 100% tax free in a regular brokerage account. So I mean, like in a regular brokerage account, avoid US dividend stocks. If you're buying US companies, make sure they're growth companies. And that way you're not paying a 15% withholding plus conversion plus blah, blah, blah. Just own US growth companies. You pay the same tax, and it doesn't make a difference on anything else. There's no difference in taxation. The only thing that I think is really different is if you own like Canadian dividend stocks, you get a dividend tax break, because if the company makes 50% of their revenue in Canada, the government gives you a bit more leniency on that income. I switched to IBKR as my broker for US stocks, by far the cheapest exchange and trading fees. Yeah, we've been having that argument as of late too. What are the best brokers? But still, I will leave it at that, folks. I appreciate you all coming by to listen to me ramble. My clownish sentiment and this insane perspective. to the point where I think I'm actually having a nosebleed. I had a blistering headache today. I don't know what's going on. I'm having a nosebleed. You guys got me going so much today, and the government got me going so much that I'm having a nosebleed. It's probably pretty dry in here too, which isn't helping. Nice chatting with y'all. I'm gonna go take care of my the first nosebleed I've had in probably since I was like 12. Fascinating. Yep. Plus the use of tray. Anyways, folks, it was so odd, bro. So odd. It's an odd sign here. This is what you guys got me worked up, baby. Stay cool, stay awesome, folks, and hopefully I'm not having a stroke. Peace.